Welcome to the Share Talk interview, and it's a special one, a special occasion. We've got somebody making his debut here, Rusty Hutson Jr, CEO of Diversified Gas and Oil. It's an American company, as
Correct,
you maybe
correct.
guessed by your name, more than the company title. But just tell us about what you do, and also eventually why you came to the London market.
Sure. Well, DGO, I actually started the company. Myself and my executive chairman started the company in 2001. We're an onshore U.S. producer, specifically in the Appalachian Basin, which is one of the lowest risk basins and the oldest hydrocarbon producing region in the country. We started the company in 2001. We've grown it substantially over the last 15, 16 years. But last year we saw an opportunity. We saw a consolidation occurring in the basin. And really was the gist of why we came to London. We saw the opportunity to come here to have access to some institutional type investors that we wouldn't have access to in the U.S. on the markets over there.
So it's a pat on the back to London, really, for doing what it does and doing it well. Why did you list on AIM? I mean, was there a particular attraction there?
More or less because we had in 2015 we had listed a bond here in the UK on a smaller exchange. So we had created some relationships there that we could take advantage of with the AIM listing. But for the size of a company that we had and the ability to attract the institutions for growth capital, AIM just seemed like the best solution for us.
Apart from being working from the Appalachians, which sounds very glamorous from this distance, what differentiates you from your peers?
Yeah, I think that as you looked across all the companies that are listed on AIM, I think the differentiating factors really are a couple things. Number one, cash flow. We're not a risk-taking type E&P company that you see traditionally here listed on AIM. So we have cash flows. We've been in business for a long time, and the ability to pay a dividend, which we have done from the onset. So
almost shocking for AIM.
Shocking for oil and gas company.
So it's not a jam tomorrow company. It's not a over the rainbow. You're actually doing it. You're actually producing. And it's not the blue sky type of thing that people.
No, we're not out trying to create value through the drill bit. We're creating value through producing wells.
Right. And what apart from that, apart from the dividend, apart from actually producing, are there any other factors that you think we should be focusing on as positives?
Yeah, I think that our ability to source attractive acquisitions. We're paying very favorable multiples for those deals because of where we're at and our scale and our ability to close on transactions. Gives us a heads up on all the other operators in the area as it relates to the conventional plays.
Right. I mean, the other thing about AIM is that, let's say, sometimes the management aren't quite as experienced as they could be. This is not the case in your case.
Correct. We've been there for 16 years. We've been through multiple cycles, commodity price cycles, and we're a very low-cost operator, compared to our peers.
Right. So near $50 a barrel, you're happy. I mean, not laughing, but let's say happy with that. That's a mid-range, let's say.
Yeah. So our operating cost per barrel of oil equivalency is sub $8. So we're in really good shape as it relates to that.
Right. And as far as this is my own question. Let's say bigger story. OPEC seems to be hurting with the U.S. producers. Are you going to start changing the balance of oil production in the world?
I think that OPEC, the U.S. shale producers, obviously, they're just going to continue to produce oil. That's what they do. But really, what sets us apart is we have a higher percentage of natural gas production than we do oil, and I see nothing but positive signs for natural gas going forward.
Right, we've got some shareholder questions here, so we have to be polite and everything. And when are you likely to resume trading?
As soon as we submit the new admission document, which we estimate to be mid-June.
Right, and after all this, do you have plans for further acquisitions once this one is out of the way?
Yeah, so part of the fundraise is because we're seeing a very sporty pipeline of acquisitions, and we'll continue to look at each one of those and really to evaluate them on a case-by-case basis. But with this big acquisition that we're getting ready to close at the end of the month, our primary focus will be on getting that integrated and making sure it's seamless as possible.
Okay, so you're on the front foot here. You're going to try and, I presume, ramp up production over the next coming months?
Yeah, so our production, with this new acquisition, we'll be increasing our production by over 173% with this acquisition alone. So it'll just be continual increase in production from here.
Okay, so a good start to your life on AIM, basically.
It's been a very busy 3 months.
Okay, Rusty Hutson Jr., CEO of Diversified Gas and Oil, thank you very much for coming today.
Thank you for having me.